Hello guys, welcome to the sharpening session for today. Let me just put the disclaimers up on the screen. So there they are, top left hand corner. So please read them, not just for legal reasons, but also to understand the kind of expectations you can have from these kind of videos. I'm going to take my glasses off because I think they're reflecting the camera light there. So sharpening sessions, for those that might not have joined before, these are sessions where we are looking at concepts, theories, answering questions, things like that. Obviously, most markets are closed over the weekend, so we do sharpening over the weekend where we're not trading, we're not placing trades or anything like that. We might explain a bit of methodology, or again talk about a concept or something like that that you guys have questions on, or stuff that you want us to cover. Now I'll check the chat boxes, so when you see me looking side to side, that's what I'm doing. I'm looking at the chat boxes, seeing if anybody has anything that they want to cover or any questions that they have. Otherwise, I tend to have specific sort of theories and ideas that I'll go through on these sharpening sessions. So just quickly to explain, it should come up here, there we go. So like I said, it'll be sort of lecture time. We'll go through sort of theory stuff, trade plan and trade reviews if we need to do that, questions and answers, and again anything else that you guys need. Now if you have any questions, if you're watching the recording or you think about it after the fact, you can email me, becky@traddictiv.com, and there's also support@traddictiv.com, which you can use to email us if you have any questions. You can also go to, if I bring it up, be this one, tradewithufos.com/Becky. From this link, you can scroll down and you can ask a question here in this public space. Now that's great because if you ask it in a public space, we can answer it in a public space and everybody learns from the same area. So it might be that the questions you have, somebody else has asked and therefore you already have the answer. Or you might be doing somebody else that favour later down the line. From this link as well, you can also book one-on-one coaching if you'd like, and you can also get apps and platforms depending on what you need. So that's all the sort of setup and the groundwork that we need to do. Oh, no, there isn't. One more thing. We are streaming in different places at the same time. So we're on Facebook, YouTube, Twitch, LinkedIn, loads of places, as well as our closed coaching environment as well. So what happens is after about the halfway mark, and usually during the week on our sessions where we're trading, it's after we place 1 or 2 trades. But on the weekends, obviously, we're not placing trades. So round about the halfway mark, we'll cut the stream to the free platforms and continue within our closed coaching session for those that are obviously paying the monthly fee to have access to more of our time. Now, obviously, with sharpening, we don't have like an obvious cut-off point. So it'll tend to be once I've answered a few questions, once we've finished on a particular topic. So hopefully that makes sense. So again, I'm going to keep my eye on the chat box and keep my eye on what's going on, in case obviously people have questions. Sometimes I miss them, don't want to miss them, if you guys need me to cover something. So what I was thinking to do today, let me just move something real quick. What I was thinking of doing today is covering off some of the articles that actually I've written a lot of these, the articles that we have, and expanding on them. So for those of you that might have read them, you might have a little bit more context. For those of you that haven't read them, at least they're topics that we write these articles because these are sort of a lot of the time from questions that we get. So hopefully it helps answer some questions you have, or put to rest some doubts or queries that you might have. And then of course you can always go to the article afterwards as well if you need it reinforced. So the ones that we've got, the biggest mistakes retail traders make, what style suits me best for Forex trading. So that would be figuring out which style suits you. That's not just Forex trading, by the way. It would be the same for other types of trading. Key components of successful trading. So this is subjective versus objective. How are we using those things? Combining fundamentals and technical analysis. And then we have improving probabilities with moving averages. So you see there's a little bit of a range of topics there, a little bit of differences in what we're covering. For the first half, I was thinking it makes sense to stick to subjective versus objective, fundamentals and indicators. They tend to kind of go together. So starting with subjective versus objective. Now, when we're trading, when we do anything in life, we are human beings. which means we have emotions, we have biological needs. We might be hungry or tired, and that affects the way we think and therefore affects the decision-making processes that we go through. We might be angry or sad or excited or fearful or any other of the number of emotions that we can have, or combinations of all of them, that again make our decision-making process different. Which means if we are behaving subjectively, then we are, especially if we're trading subjectively, then we are probably making different decisions all of the time, at different times, using different things, saying yes to some trades and no to other trades, but swap that over on different days. So what that means is we might be sometimes, if we're being subjective, sometimes we have a trade that hits this marker, and this marker, and we go, great, let's trade it. Other times the same trade, the same setup hits these markers, and because of our emotions, because of our thought process, because of whatever, we say, nope, not taking that one today. That means we're not consistent. If we're not consistent in our action, then we're unlikely to be consistent in our results. What we get off the back of it is unlikely to be something that is working, or even not working, but in a way where we can logically see what's going on. Now, if we behave objectively when we trade, and I'm talking purely methodology, then at least we are consistent. If we have a set of rules and we use technology to help us on this, we go, this hits, this hits, this hits, take the trade. Next time round that happens, this hits, this hits, this hits, take the trade. Now we can behave objectively by either having a trade plan and having a routine that we religiously stick to, and or by using technology to help us decide a lot of these things. If technology does a lot of the analysis for us and says, hey, buy, then we just buy. If technology does a lot of the work for us and says, buy at this price, have a stop loss at this price, then that's what we do. We're not double guessing, confusing ourselves. Sometimes this, sometimes that. Oh, I'm not sure. Looks like this, looks like that. I've worked with people over the years. I used to be one of these myself, where the main methodology of trading was based on a skill set, based on pattern recognition, based on what we see. And so therefore we might say, oh, I like the look of, let's say if we've got these UFOs. Oh, in fact, let's bring up top and then we can show these UFOs. You might say, oh, I like the look of, don't know what that's doing there. I like the look of this one. I don't like the look of that one. For whatever reason, maybe it's because of the way it left the UFO, or maybe it's because of the amount of time the UFO was being formed for, or maybe it's this one's come back and this one hasn't. Whatever other rules you want to look at, or other sort of visual things you can pick out. If you're making decisions because I like this but I don't like that, define like. Define what looks good or what looks bad. Define these things, quantify it, because otherwise what you like on any given day can change based on how you're feeling, based on the news that's going on and how that impacts you, based on if you've taken losers recently versus winners recently, might change the way you think about what you like. And as human beings, we are very much recent in the way that we weight things. We're like an exponential moving average in the way that we are. We could have had, let's say at the start of a month, let's say 20 days worth of trading. The first couple of days we could have had massive winners. And we feel really excited about that. And then it goes okay, and then we might have a few losers. And because the few losers have happened more recently, by the time we get to the end of the month, maybe we took 10 losers. We might still be at a profit. But because we've taken 10 losers more recently, we say, strategy doesn't work. Or I don't want to do this anymore. Or we start to break our rules. Or we start to make up things about what we think we've seen in terms of correlations without any data to back it up. And so then what we're doing is we are, again, making decisions that are subjective, changing our plan, not being consistent, and therefore not reaping the rewards of being consistent, not seeing consistent results, whether that be winners or losers. If we're losing consistently, but that's based on consistent action, then we are proving objectively it doesn't work. If we're losing consistently based on inconsistent action, we've not proved anything other than that our inconsistency has likely led to consistent losses or inconsistent results. So when it comes to technology and when it comes to a plan, with the way we do things at Traddictiv or Trade with UFOs, we have a set of rules that says, do we have probability up or down? If it's nowhere, based on our autoclimate, we do nothing. If probability is up, we look to buy. Where do we buy? We use UFOs. We use technology that shows us exactly where those buy orders are, and therefore where we're going to be buying. We have rules that tell us use these numbers. Take away 10 cents to have a bit of wiggle room on the stop. Done. Every single time. Why do we pick this one and not this one? Based on the EMA on the bigger time frame. So it has to line up in that way, and if it doesn't line up in that way, we don't place the trade. It's not which one do we like the look of, or it doesn't line up like this, or oh, I'm not quite sure. Always strict, keeping objective. So going back to that article, when we are being objective when we trade, our methodology needs to be objective. However, I'm about to sort of switch this a little bit here. The point of this article, and if you read it, the point of it is not to say, and if we kind of just come to the conclusion, right? We are at the end. Okay, so here we go. So the best trading psychology tip for all, being able to reflect on the elements of our trading strategy that fit us better as individual human beings, and then combining it with a methodology that is objective. So when we are executing our trades and following the methodology, the market did this, the stock moved like that, the ATR was this, the indicator said this, whatever, it's objective. But we need to reflect on elements of our trading strategy as a whole that fit us better as individuals, which means subjective. The point of the article is not to say be objective 100% of the time about everything, because the reality is the fact of the matter is we are humans. We are subjective creatures. We have different times of day that we are available. We have different times of day that we work better or think better. We have different things going on in our lives. We're more or less busy. We're more or less risk tolerant or risk averse. We are on spectrums of loads of things. The chances of two traders being exactly the same in terms of needing to trade the exact same strategy that fits them as an individual is really, really unlikely. And I always say it this way. So if we imagine, let me bring up a chart or something and get some white space. So if we imagine, if we had McDonald's as a company, right, not as a stock, we have McDonald's. McDonald's is a franchise model. Most of them are franchises. So from that central McDonald's model, you have many thousands, I would imagine, of franchises all over the world. So you've got all these little franchises, all of these little guys. All of these little guys use that central model. But does a franchise in this part of the world, let's say that's Tokyo, have the exact same menu as a place in Virginia, in the US? Probably not. Probably got a different menu. In fact, I went on a road trip through California, unfortunately, a couple of years ago now. Obviously, we haven't been able to travel, but I did go on a road trip in California a couple of years ago. And on that road trip, we were driving through from the south to the north. And as we got further north, in the same state of the same country, and we would stop for fast food regularly, as you do on trips like that. And what we noticed is, as we went further north, the Mexican food equivalent or options were less. The ability to get spicy sauce with things was less, because you're getting further and further away from the Mexican border, and therefore further and further away from a demographic that eat a particular type of food, or that are more likely to eat a particular type of food. So let's take McDonald's as an option. Even if you have two that are very close together, they're still going to operate slightly differently. But they're still a McDonald's. They still have lots and lots of things in common, but their menu might be slightly different. Similarly, if you are in a third world country versus a first world country, the price is going to be different. The currency is going to be different. If you are open on a industrial estate versus being open inside a mall, but versus having a drive-through on the side of a highway, you're going to be open at different times. If you've got a small one versus a big one, you're going to have different amounts of staff. You're going to have different rules as to how your staff need to be paid depending on which state you're in, which country you're in. But it's still McDonald's, and it still works. They still make a lot of money. The franchises still do very well. So when we're trading, it's the same thing. We might have a central methodology, which in this case for us, this might be trade with UFOs. If I do that, that might work. No? Trade with UFOs. So our central methodology might be trade with UFOs. And there might be many, many different people that are using this methodology. Many, many different people that are still using UFOs. But one of them, I'm just drawing out these lines, one of them might do it at 2 a.m. because that's when they're awake. Let's assume you've got two traders that come from the same part of the world and they've got the same amount of money in their account. One of them might do it at 2 a.m. One of them might do it at 1 p.m. One of them might do it at 9 a.m. One of them's doing it for half an hour. One of them's doing it for 2 hours. One of them's doing it all day. Somebody has the same time availability, but they're doing it with $500 in their account. This person's doing it with $5,000 in their account. This person's doing it with £10,000 in their account. This person's doing it with 10 million Canadian dollars. So again, hopefully you see my point. There's loads of different variables that go around that have nothing to do with an objective methodology, but everything to do with the individual person. Now, I actually think that's a beautiful sweet spot, because if the only way to make money, let's do it that way. If the only way to make money was that you do X, Y, Z, well, if you can't do X, Y, Z, or Z, then you can't do it. And if X, Y, Z is a certain time of day, a certain risk tolerance, a certain amount of money, and you're not around at that time of day, you don't have that risk tolerance, you don't have that amount of money, let alone the other variables that it could be, well then you can't trade and you can't make money. What's brilliant about trading is that you can make money, if we do this again, you can make money doing anything, all kinds of things. It could be, I'm going to put a question mark there, it could be any way of doing it, any combination of variables. There are people that are trading Forex on tiny time frames at 8:30 a.m. for 15 minutes, Mondays, Wednesdays and Fridays, with 500 euros in their account that are making money. And there are people that are trading stocks over long periods of time in Asia, and they do it once a month on a Monday at 2 p.m. and they're making money. There are loads of different ways that we can be trading, loads of different ways that we can be making money. What's important is that we first look at those variables and then say, right, what subjectively fits me? So we do subjectivity first, and then we come down to our methodology, which is objective. If we are saying we need to do this methodology exactly as this person does it, whoever they are, again, might not fit our subjective situation, our subjective environment. Whereas if we say, based on this, what time of day am I actually around? How much money do I have? How much money am I comfortable to put into an account? What percentage of that account am I happy to lose each time I'm wrong? How many times in a row would I be okay to be wrong before I start freaking out? It requires us to be self-reflective. We need to think about all kinds of different things, play it out, back test it, try things, for us to really know how we would feel if we were wrong 5 times in a row. Can we hack being wrong 5 times in a row? What would that mean to our account? What would that mean to the way we feel about our trading? What would that mean about how we view our objective methodology? What if we were wrong 10 times in a row, 2 times in a row? And from that, we can then take that objective methodology and apply it in different situations. Take that core McDonald's methodology and apply it to a different franchise. If you try to apply the exact same thing that you apply in Chicago on a McDonald's franchise to London, to Vietnam, to Australia, Sydney and Australia, whatever, you're going to have very different results, and it probably won't work. What works in one place probably won't work in another. What works for one trader probably won't work for another, because of this all-important subjectivity that we need to be aware of. So figure that bit out first and then get to methodology. So many people flip this on its head and they say, teach me this, teach me this, teach me this. I want to know that. Or let me get a trading bot or a whatever, indicator, whatever. I'm going to use that. I'm going to be objective and I'm going to follow that methodology. But if that methodology doesn't suit you because it requires you to have a higher risk tolerance than you do, or it's not placing enough trades for the impatient person that you might be, or it requires you to have more money, or is not using enough of the capital that you do have, or it requires you to do things at a certain time when you're not around, no point doing it. So figure this bit out first. This bit comes first, always. So this bit comes first, and then we can be objective. Then we can figure out our methodology. So when it comes to methodology, we need to be objective. When it comes to figuring out the strategy overall, we need to be subjective. So that's kind of the summary, I guess, of this article, which is subjective versus objective, and explaining those kind of things and how these things can impact us as traders. When it comes to combining fundamental and technical analysis, this is where we need to think about the fact that there are different ways of approaching the markets. So this is when it comes down into choosing that objective model, choosing that objective methodology. Of course, I trade in a particular way. I use trade with UFOs. I'm going to be biased by saying trade my way, trade the way we do it. And great, yeah, it works for a lot of people to do that. It's worked for me. I'm happy with it. I know a lot of people are too. But there's also loads of other ways that you can trade that people are happy with. And loads of other ways that you can combine things or do things by themselves or whatever in order to be a successful trader or a consistently profitable trader. So how do you know? Especially if you're new to trading. You're new to trading and you're thinking, well, I've got to know what the news is, and I've got to be able to interpret the fundamentals, like what's behind that currency or what's behind that stock. Who's the CEO? How do I analyze earnings reports? How do I analyze balance sheets and things like that? How do I do all of those things? Oh, but also there are these people trading with moving averages, and there are people trading with Fibonacci's and UFOs and crossovers of different indicators and Ichimoku cloud and Elliott wave and all these different things. How do you even know where to start? If you were to Google trading, how would you even know where to start? And again, this is where we can start thinking about these different kind of things. So if we understand first, fundamental traders, their job, or what they do, if they're purely fundamental traders, is they get into things based on the background of them. Earnings, news, products releases, balance sheets, whatever. Now, what they will do, and I think I say it down here. So they tend to be less, oh, there you go, less concerned with when they buy or sell. So what fundamental traders do, so fundamental traders, they just, oh, whoops, there we go, do that again. So fundamental traders will just buy or sell or nothing. That's all they're trying to figure out. Do I buy it? Do I sell it? Do I do nothing? Based on whatever they base it on. So that might be, let's say for example, the news is has come out about a new product released of a new iPhone. And so they would analyze that and then decide whether or not they buy Apple or sell Apple. Maybe there's been a scandal of a CEO of a particular company. So do they buy that stock? Do they sell that stock? That's all they're focused on, is do I do these things or do I keep away from it? A technical trader are going to do the same thing. Buy, sell, nothing. and then specifically, so specific prices, entry, stop, and targets. That's what a technical trader is more likely to do. Technical traders care more about specifically, where do I buy? If this line crosses this line, then I buy at that exact price. If that line crosses that line, then I sell at that exact price. If my UFOs are here, then I buy at the top of that UFO and I sell below the bottom of it. So it's much, much more specific. Exactly what prices are we buying and selling at? Pros and cons to each. So if you are a fundamental trader, and only a fundamental trader, I was going to say it's easier. It's less complex, shall we say, because you're not having to worry yourself about specifics. I would argue if you're a fundamental trader, you should be doing that based on bigger time frames, longer term stuff, investing, position trading, things like that. If you're a fundamental trader and you are trying to do that on small time frames and you don't have specific areas as to where you are proven objectively wrong, which is what a lot of technical traders will have. It will be when it crosses this line, when it goes past this pivot, when that line crosses that line, when price goes through this level, whatever it is, there's a specific thing that says this is where I'm wrong, therefore this is where I get out of that. This is where I have a stop loss, or this is where I manually close out, whatever. But this is where I get out of the trade and lose a predefined amount. With fundamental traders, a lot of the time, you would be waiting for price to go up. News comes out, you're analysing it, and you're analysing all the while that's moving. Maybe it's going up. And then price might be coming down for a little reason, but your fundamentals are still telling you it's fine. And then you've got new news that come out that pushes it down. You analyse it and you might get out here. You don't have specifics. On the longer term, that matters less. On the shorter term, you're trying to make these decisions quickly. So news is released and you've got to analyse it and decide it to get into something quickly before you miss the move, rather than spend 15 minutes analysing and going through different reports and whatever. And by the time you've done that, you've missed it. You've missed that short-term move. It's already happened over that 10-minute period. So if you're fundamentally trading, you should be doing it, I would say, on bigger time frames. Technical trading can be done on any time frame. But the downsides, I guess, of technical trading is that you do need to be more specific and you do need to have more rules that allow you to get in or out of trades. And you might get out of a trade based on a technical thing and perhaps actually miss a good move to the upside because you got out too soon and things like that. So you've got to balance those things. However, I'm not necessarily making the argument that we should be one or the other. To me, again, I think there's nothing wrong with combining both. I personally, by the way, just to be very sort of clear on here, I'm just going to come down, find some white space if I can. No, let's do it on top again. So you've got fundamental trader. So fundamental versus technical. Fundamental traders care a lot about what they buy or sell. So they would care about, so let's take this is Virtual Financial Incorporated, I guess. They would be wanting to look into the background of that stock. They want to know about the actual thing. Technical traders don't care. So I'm a technical trader. So to be very, like I said, very open about it, I'm a technical trader. That doesn't mean, by the way, that I don't see the value of fundamental trading, nor that I wouldn't see the value of combining these things sometimes. And I do, but not in the traditional way, and I'll expand on that. As a technical trader, and I'll just highlight that for me. As a technical trader, I do not care what I trade, as long as it hits certain criteria. So what I mean by that is, if a stock is below a certain price point, has probability upwards, and fits my technical rules, I don't care about what that stock is. I might not even have ever heard of the company. I might be trading currencies that I've never looked into. Maybe currencies I've never heard of. Not often, because I tend to trade the majors, but the point is that I might be trading things that I know nothing about. And to fundamental traders, that concept is absolutely crazy. Why would you trade a stock that you don't know? Why would you invest in a company that you don't understand about that company? Because technically speaking, statistically, probability speaking, it has likelihood of going up. And if I'm wrong, I'll get out at a predefined price, defined by my technical analysis, and lose 1% of my account. So I don't even really care if I'm wrong. I do care if I'm wrong, and of course we have a strategy and methodology that help us decrease the chances of being wrong, and also decrease what we lose when we're wrong and increase what we make when we're right. But to me, absolutely no point for me as a technical trader to, on top of my technical analysis, go and find out all the background about that stock. Because it's more likely, coming back to the subjective versus objective thing, it is more likely to confuse me. It is more likely to have me be confused about what I'm going to do, have me take time to decide what I'm going to do, have me behave subjectively. So I would say, if we're thinking about fundamental versus technical, let me just do these in a different order. So if we do fundamental, and then we'll put technical, fundamental, and we'll put technical down here. Technical. Cool. So fundamentals, as far as I am concerned, are more subjective and longer term. Technical is more objective and any term, if we want to call it that. The reason that it's any term is because you can apply technical analysis to any chart, because the point of technical analysis is you care about the chart, you care about the data. You can get data from anywhere. With fundamentals, you're making decisions based off of reports and news articles and things like that. It takes time for you to analyse that as a fundamental trader, as a human being. So it makes more sense for it to be longer term, and again, implies subjectivity. With technical analysis, people can still be subjective, but you're more likely to be objective. So how might we combine these two? And how might we do that in a traditional way, and how might we do that in a less than traditional way, or kind of the opposite of what you might think? So let's say we have technical analysis, and for us that might mean we have a UFO, confirmed upwards climate, and we have the EMA lining up, right? So technical box is checked. Let's say also, so let's say on Virtual Financial Incorporated, you also had higher than expected earnings, which might be another buying signal, right? Because what we want to do as traders is think about the statistics and the probabilities. We have probability that the price goes up because we have a thick blue dot, probability up. We have buyers and we have an EMA in our favour. Let's assume that that's all lining up. So we have check, check, check. We also have fundamental traders across the world that would likely be buying it because, oh, they're doing well. Higher than expected earnings. That company's doing well, buy it. So what we have there is more buyers coming in for different reasons. If you've got lots of buyers coming in for different reasons, it's more likely to push price up. So you want to be a buyer of it anyway. So it increases your likelihood of being right. Now, this is where it might get confusing if you're not strict on things. What if you had, same situation, technicals all fine, but you had lower than expected earnings? Then what you've got to do is balance, oh, technically I should be buying it, but fundamentally that might be a sell signal or a keep away signal. So what do? You have to prioritize one of them, and you have to be strict and objective about which one of them you prioritize. I always say to people, if it was as simple to make money in the markets as simply follow what you would intuit from earnings reports and things like that, everybody would make money in the markets, and they don't. So there are other things going on. Again, to me, it's about increasing or decreasing your probability. You might be somebody that says, I will only trade if both the fundamentals and the technicals agree with each other. And be very strict on which technicals are you using and which fundamentals are you using. Because if you're saying fundamentals as a whole and you've got some news reports saying this, some earnings reports saying that, CEOs doing this, something that somebody told you that might know inside stuff of what's going on in that industry told you this, and they're all conflicting, that's going to confuse you. So if you're going to combine fundamentals and technicals, absolutely fine, but be clear on which fundamentals you're using, which reports you're using, and stick to only those and don't let anything else cloud it. And be clear on which technicals you're using. And then if you want to say all of those things need to be checked, so in order for me to trade, I need to check this box, whatever box that is, and I need to check this box, whatever box that is, you're going to have less trades. Because there are invariably going to be many situations where one of them saying one thing and the other one saying the other. So if you're only going to trade when they both say the same thing, you will decrease your opportunity, meaning you'll have less chance to place trades. But what you will increase is your probability. Because if they're both lining up, you've got more likelihood that there are more buyers where you want to buy or more sellers where you want to sell. So increasing your probability. So you can combine fundamental and technical analysis to help you increase your probability. Or what you can do is be somewhere in between, where you might say, okay, technical needs to be checked. Fundamental, if it's checked, then I increase risk. If it's not checked, then I keep the risk the same, for example. So let's say, for example, you might risk 1% of your account normally if the fundamentals don't add up as well, because you're still going off of technical. But if the fundamentals also add up, you might risk 1.5% of your account. So you increase your risk by 50% because you've got extra probability. So it makes more sense. The more probability you have, the better it is, or the more sensible it would be to increase your risk. No point increasing your risk if you don't have lots of probabilities. That would be more like gambling. So you can say, I need both of them to line up. Okay? You can have less opportunity but higher probability. You can say, I want to favour one or the other. So you might favour fundamentals or favour technical analysis. That's fine. And look at the other one to help me determine whether or not I have added probabilities and therefore increase my risk, or keep my risk as it is because I don't have added probabilities. It's one way of doing it. Now for me, I said the way I use fundamentals is kind of the other way round, or not in a way that you would think. I don't care about the content of the fundamentals. If anything, if I feel like I know too much about something, I won't trade it. Or if I feel like I have an opinion too much about something, I won't trade it. So I used fundamentals to actually take away trading opportunities. So what that might be for me is, so for me, and this was obviously years back now, for me, Brexit was one of those fundamentals. I'm a technical trader. As a technical trader, I trade anything, I don't care. But during Brexit, I did not trade the pound because I knew that I would be bringing bias with me. Whatever my subjective opinion was about Brexit was going to come out in the way that I made decisions on my trading, without me even realising probably. So I didn't trade it. I allowed the fundamentals to influence my technical trading by taking away instruments that I could have had bias on. So I didn't care what the news was about Brexit when it came to my trading. I might have as a British citizen, but it didn't bother me in terms of my trading. I wasn't saying, oh, Theresa May said this, so I'm going to buy or sell. Or, oh, this, I don't know, the EU said this and they released this statistical report. I'm going to buy or sell this. I just kept away from it. So the fundamentals of a huge political, economic thing that was going on in the world, and specifically for my country and the Eurozone, I kept away from the pound. Didn't want to know. Now that it's all settled and it is what it is and we live with it, I care less about that, and I can go back to trading the pound because I don't really have any particular feelings on it. Equally, this could be, so we put fundamental and technical up again. And I know, by the way, I've gone a little bit over the halfway mark in terms of cutting the live stream, so I'll finish this point and continue in the closed coaching. Equally, you might say an election. That might be something. If you've got an election and you are a technical trader, you might say, I don't care what the result of the election is as a trader, as a human being and as a person with political leanings. Of course you're going to care about who wins an election, but as a trader you don't care, meaning you're not going to let it impact whether or not you buy or sell something, because that's extremely subjective. So instead what you might say is, for the week leading up to and the 2 weeks afterwards, I am not going to trade US markets if it's a US based election. I'm not going to trade Australian markets if it's an Australian election. Or you ignore it if you can, but we're human beings, so we can't. So you might allow fundamentals to not tell you whether or not to buy or sell, not back up a strategy, not back up whether or not you should buy or sell, but to tell you which ones you should be keeping away from. That's how I use fundamentals. To me, if there's an election, if there's a big political thing going on, I do not want to be trading the stocks of that country, nor the currency of that country. I don't want to be involved, because I know that my subjective side, my human side, is going to start to influence what should be my technical and objective trading methodology. So we will cut the live stream to the free places. We'll continue within the closed coaching. Just to say here, the ones that we've just gone through are key components of successful trading, subjective versus objective. So you can find that in trading articles that are on the website. There's also this one that we've gone through, which is combining fundamental and technical analysis. So if you want to go and have a look at those afterwards to kind of help remind you of this without having to go through a whole video, that's where you'd find them, in trading articles on the website, on the Trade with UFOs website, and you can find them on there. So you can check those out. Okay, so as you highlight over them, you'll see the names. Okay, so any questions for those of you that are watching on YouTube or anything like that, please go to tradewithufos.com/Becky. You can get apps from here, you can get coaching from here, but you can also, and this is what we'd rather you do, is post questions on this link to this place, to this forum, so that other people can learn from it, and we can all answer the questions there, ask questions there, and all come to this place for that. Or you can email me, becky@traddictiv.com, or support@traddictiv.com. Okay, so I will cut the stream now to the free places, continue within the closed coaching. Anyone that's got questions, let me know, and I am happy to answer them. I don't see any at the moment, but as I cut the stream, perhaps that might be your chance, if you're in the closed coaching, to type a question out so that I can roll straight into that once we've cut the stream. So for those watching on YouTube and other places, take care, have a good rest of your weekend, see you soon. For those in the closed coaching, bear with me for just 30 seconds or so.